briefly go over today's agenda. In just a few moments, you will hear opening remarks from Congresswoman Luz Rivas and from Brian Wozniak, our IRS liaison. Following the presentation, Mr. Wozniak will answer your questions. Please feel free to leave general questions in the chat. If your IRS concerns is specific to your situation, we encourage you to contact our office at 818-253-3535. Our team of caseworkers is available to work with the IRS to help address your concerns. You can find our office contact information in the chat box. For those of you tuning in, thank you again for joining us for our tax season webinar. As a reminder, please keep your cameras off and remain muted for the duration of the event. At this time, it is my pleasure to introduce Congresswoman Luz Rivas.
Okay. Good evening. Thank you for joining us today for my office's IRS webinar. Thank you, Brenda, for leading this. Tonight, we're joined by Brian Wozniak, Senior Tax Specialist with the IRS, and Brenda Lopez, a Constituent Service Representative with my office. We'll be hearing about tax filing requirements, tax law changes, and strategies to minimize errors and refund delays. So I'm glad you're here. It's very timely. I actually have an appointment to do my taxes tomorrow. So even for myself and my own personal business, this is very helpful to understand. To continue to be notified about any upcoming webinars that we will host and events, make sure you subscribe to my newsletter and follow my social media. My office will be dropping the links in this chat. If your friends and family would like to join a future webinar, please make sure they sign up as well. My office connects constituents with federal agencies on issues including tracking your tax refund or any other tax concern that you may have. We also help companies and nonprofits with any IRS issues that they may be having. I recently visited a nonprofit that, while I was there, informed me that they needed help with the IRS on an issue that they've been dealing with for months. So I was happy to be able to connect them with my district staff, my caseworker that Brenda and others, to make sure that they get the help they need. You know, my office is the in between, the link between federal agencies and you. So you don't always have to call that 1-800 number that you'll be on there forever. We have different contacts with different federal agencies, and we make a request on your behalf. And so I just want to make sure that you know that if you're having any other issue with a federal agency, please don't hesitate to reach out to my district office. But thank you again for joining us today. And I hope you get a lot out of it. Thank you.
Okay. Good afternoon, everyone. Thank you, Congresswoman Rivas, first of all, for sponsoring today's town hall. My name is Brian Wozniak. I am with the IRS Congressional District Liaison Unit. I work closely with the Congresswoman's office on any constituent cases where you folks might contact them. But again, thank you, Congresswoman, for sponsoring this event. We do appreciate your partnership and the opportunity to share this important information with your constituents. So let's get right into it. We'll go on to the next slide, which just really lists our agenda today. On the next slide, you can see that we're going to focus on IRS resources and where you can get help. There we go. It looks like there's a little bit of a time delay between changing the slide, so bear with us. Technology issues, we're all getting used to it. So on the agenda, we're just going to look at IRS resources, where you can get help, and then we'll spend a few minutes talking about some of the provisions of the new tax legislation that may impact your filing this year. Now, the 2025 filing season formally started back in January 26. And we're currently processing all tax returns on time, et cetera, and we strongly encourage everyone to electronically file their tax return because electronically filed tax returns, they take a maximum of 21 days to process. And many electronically filed returns are processed and refunds issued within as little as 5 to 10 days. So filing electronically, e-file, in combination with direct deposit for a refund is the fastest way to get your money. Paper file returns can take 4 weeks or longer to process. And then if you're requesting a paper check, that's even longer. So that's it. We'll move on to the next slide. We're going to get into the meat of the presentation here. And by the way, we're posting an IRS resources document. This is separate from the PowerPoint presentation we're looking at today. This IRS resources document, it just contains a series of irs.gov web links that provide additional information on the PowerPoint slides. So for example, as we look at this slide, the very first item on the slide at the top says internet access and income below $89,000. If your income is below $89,000 and you don't have any complex issues on your tax return, like if you're not running a business or a rental property, and your income is 89,000 or less, then you can use IRS free file. The link is there. It's also the first link on the resource document. And the IRS free file program is simply a public-private partnership between the IRS and many tax preparation and tax software industry leaders who provide their brand name products for free. So again, if your income's below 89,000, try IRS free file, go to the link, see if you qualify. The second item on the slide is if you need in-person assistance filing your tax return. There's two programs listed there. The first one is the Volunteer Income Tax Return Preparation Site. We call it VITA, VITA, Volunteer Income Tax Assistance. And the second one is AARP, American Association of Retired Persons. And for people seeking in-person tax return preparation, if your income is under $69,000, you can use that locator link there to find a location near you where they'll help you do, again, free basic tax return preparation for qualified individuals. Now, I should state those in-person sites, most of those are only operational during tax season. So, which tax season is really February through April. So if you're going to utilize one of those, don't hesitate. Look up, find a site near you, make an appointment, and go in and get your taxes done. And then at the bottom of the slide, for people whose income is above those amounts, or if they do have a more complex tax return to file, they can use our Choosing a Tax Professional tool to find the right tax return preparer to help them with their return. Now let's transition a little bit. We're going to go to multilingual resources, which is on the next slide. And it's the fifth link on the document that we provided to you, the IRS resource document. And I should state that the IRS does strive to serve all taxpayers, no matter where they live, their background, what language they speak, et cetera. And to help fulfill that goal, we've translated quite a bit of tax information in commonly spoken languages. There is a publication 4269, which is listed there at the top of the screen. That's for just general information for people who need help in a language other than English. The page we're looking at now is called the irs.gov languages page. It offers basic tax information in 21 languages, but again, it's just basic top tax information. But if you look carefully at this slide, kind of in the top center, you can see the word English is circled with the drop-down arrow. And that menu bar, by the way, of course, appears on pretty much every irs.gov webpage. And the default language is English. But if you were to click on that drop down caret, that drop down menu option, you'd see that we offer irs.gov in Spanish. We have translations in Chinese traditional, Chinese simplified, Russian, Korean, Vietnamese. So there's a lot of options there if you need help in a different language. We also offer interpretation services over the telephone in up to 350 languages. We have many forms and schedules that are available in print in a language other than English. So again, we try to keep those resources available to you. Let's move on to the next slide. This is the interactive tax assistant, and it would be the sixth link on the resource document we sent out. And by the way, I keep referencing that resource document. In addition to posting that in the chat, the Congresswoman staff will email that document separately after the presentation as well. So if you didn't get it in the chat or something else, don't fret, it will be forthcoming. Now, the interactive tax assistant, this is an online interactive tool. It's a tax law resource, and it takes you through a series of questions that you answer, and then it provides you with responses to the tax law questions. And the response is going to be based on the answers you give it. So, for example, you could ask the interactive tax assistant online tool, do I need to file a tax return? Or you could ask it, could I claim my child? Can I claim my child as a dependent? You can ask it more complex questions. Is my IRA distribution taxable? Are my Social Security benefits taxable? Can I deduct moving expenses? Or I had a foreclosure. How do I report mortgage debt forgiveness? And it will walk the user through a series of questions. And then again, based on the answers provided, it will give you an answer to a technical tax law question. So this may be able, this tool can possibly help you answer some questions without having to call us directly or use other resources. And the same applies on the next item in the presentation, which is the irs.gov online account. So moving along, and this would be link 7 in your resource document, the irs.gov online account is used to securely access the latest information about your federal tax account. You can see, and I don't know if the screen's stuck again. I'll have to ask one of the Congresswoman staff to see if we can change that. It might be pausing. It could be just on my end. But again, bear with us. So there is an irs.gov account. It's an online account. You can securely access, there we go, the latest information about your federal tax account. You can see information from your most recently filed tax return. You can access additional records. You can get copies of prior year tax transcripts. You can request copies of your W-2s and other income information that was reported paid to you. You can set up a payment plan. You can view 5 years of payment history. So it's a very powerful tool for you to see the information that's on file for you. And again, by viewing these items, you can often resolve a tax issue that you're dealing with without having to contact us in person. So for example, if you obtain a transcript, you may, let's say you're missing a payment or the amount that it shows you owe is not there. Well, if you get a transcript, you might see that the payment was misapplied to a different year. Maybe it was misapplied as an estimated tax payment for next year's taxes. So again, this is a tool. I should state that the online account does require that you register for it first. And you have to go through a registration process with an entity called ID.me. They're very commonly used by government entities and private sector entities, not just IRS. SSA uses it for their SSA.gov online account. Many state agencies use it, colleges, university, private sector, et cetera. But you have to register first through the ID.me segment in order to gain access to the IRS.gov account. Now let's transition to in-person help, and that's on the next slide. It talks about taxpayer assistance centers. And by the way, the items I was mentioning previously, those are kind of more self-help things. The online account, the interactive tax assistant, where to get help preparing your taxes, whether you file online yourself or need someone to help you with it. Now, these are in-person assistance. And you can see the acronym there, TAC, TAC. That's simply for Taxpayer Assistance Center. And these are your source for personal tax help when you believe your tax issue cannot be handled online or by phone, and you want to meet face to face with an IRS representative. Now, the level of assistance that we provide at the Taxpayer Assistance Center is somewhat limited. We will answer basic tax law questions. We can help with account adjustments. We can help set up payment plans, installment agreements, things with tax forms. If you're a victim of identity theft, you may receive a letter from the IRS stating that you need to come for an in-person identity theft authentication of your ID. So we do that there. We help folks with ITINs, individual tax identification numbers, and ITIN applications. So it is a limited scope, but this is a point of contact for you to go for in-person help. The taxpayer assistance centers will help resolve tax issues and concerns, but they will not prepare tax returns for taxpayers. This is not a place to go to get your tax returns prepared. Those are the other options: Free File, the volunteer income tax assistance, the AARP, etc. And what you do is on the first bullet on this slide, you can see there's a link there for Tax Locator. And you simply enter a zip code or an address and give a mile radius and find the nearest taxpayer assistance center to you. And then you have to call and schedule an appointment. You do need an appointment. Now, if you show up without an appointment and there are staff there to help you, of course, we're going to help you, but you really should call and get a scheduled date and time for an appointment so you know what to expect. And of course, bring any relevant documents, tax documents with you, and bring your photo identification. Transitioning now to the next slide, what to do if you owe taxes but can't pay. Now, if you owe taxes but can't pay in full by the April 15th deadline, you should still file your tax return by the due date, on or before the April 15th due date, and pay as much as you can to reduce penalty and interest amounts. And the reason you should file on time, even if you owe and can't pay, is because of the penalties. If you owe money and you don't file, and by the way, those are two separate acts. Filing the tax return is one act of meeting your tax compliance obligations. Then paying the tax due is a separate act. But if you don't file and you don't pay by April 15th, the penalty is 5% per month for the first 5 months. That's very significant. On the other hand, if you file by April 15th but simply don't pay, the penalty is 0.5% per month, or 6% a year versus 5% a month. And then if you file by April 15th and you set up a payment plan, an installment agreement with you, the penalty is only 3% per year. So big difference in penalty assessments there. So that's why don't distinguish filing your tax return with paying. If you can't pay, just file and let us try to help you. We'll get you on a payment plan. And more importantly, if you owe money and you can't afford to pay it, you should figure out what caused you to owe. You may need to increase your withholding from your pay. You may need to make estimated payments, but whatever it is, we want to take care of that first so that you don't owe again in future years. Let's move on and talk about identity theft. And this would be the 11th, 12th, and 13th links on that resource document. Identity theft, we've all heard the messaging, all the different things. I'm just going to say, don't take the bait, don't fall for it. The IRS, we're not going to contact you by email, by text. by social media and request your personal or your financial information. We're not going to call you and threaten you with lawsuits or arrest. We're not going to call or email or ask for other, you know, sensitive information, like if you have an IP pin, identity protection pin, etc. So don't take the bait. Don't fall for it. If it sounds suspicious, it probably is, and you have other resources to verify it. I will say that the IRS does have something, the IRS Identity Protection Program, and this is for individuals who are victims of tax-related identity theft, or even for people who are just victims of identity theft. It may not be tax related and they want to opt in to protect themselves from having a fraudulent tax return filed under their name and social security number. And anyone can opt in to the identity protection program. It's really the IP PIN program, the identity protection personal identification number. That's a unique 6-digit number where once you are in the program, every year we're going to securely get you this 6-digit number that will have to be included on all future tax returns. Now, the number changes every year. It's good for a calendar year, but you get this unique number that has to be on the return after we go through a validation process with you online and establish your identity. So just again, it prevents the thieves from filing fake tax returns under your name and social security number. And by the way, before I go, if you are a victim of identity theft, one of the items on that resource document, it's specifically the 13th link down. It's not an irs.gov link. It is the federal government's web link for all identity theft issues. And the website is simply www.identitytheft.gov. And that is the federal government's one-stop resource for identity theft victims. It has information with streamlined checklists on what you should do. It has sample letters on a guide to help you through the recovery process, dealing with potential creditors, banks, financial institutions, just a wealth of information there. So if you're a victim, you certainly would want to take a look at those resources. And if you're not a victim but would like to opt into the IRS IP PIN program, you can do that and just take preventative measures so that you're not a victim in the future. Moving on to the next slide, this talks about the Taxpayer Advocate Service. It is links 14 and 15 on your resource document. As the first bullet on the slide says, the Taxpayer Advocate is an independent organization within the IRS, and they do act kind of as an intermediary between the taxpayer and the IRS. They essentially are charged with helping ensure that every taxpayer is treated fairly, that you know and understand your rights. And our advocates there, our case advocates and local taxpayer advocates, can help if you have problems that you can't resolve on your own. And especially if you're experiencing a financial hardship, you may want to reach out to them, because if that financial hardship can possibly be resolved by your tax filing, they may be able to help. Yeah, let's just say you have notice to shut off your electricity or an eviction notice, but you have a large refund coming. They may be able to help with that so that you can avoid that financial hardship. And finally, we're going to start to wrap up here, folks. This is going to take a little while, though. The last item we're going to talk about is the new tax legislation. That's on the next slide. It is link 16 on your document, the last link. And the legislation is called the One Big Beautiful Bill. Now, I personally refer to it as OBBB, OBBB. So OBBB is what I'm referring to. And there are 4 items that I'd like to bring to your attention regarding this new tax legislation, because it may impact you. The first item, and again, if I don't know if the slides are delayed, maybe there we go. Oh, no tax on tips. Great segue. Here we go, folks. So an individual can deduct qualified tips received from 2025 through 2028. So let's just clarify. I say 2025, that's the tax year. That's last year was 2025, but that's the tax return that you're filing now in 2026. We're all preparing our 2025 tax return. So these next four provisions I'm going to talk about are available from 2025 tax year through the 2028 tax year. Congress may extend it after 2028. They may not. We'll wait and see what happens there. That's outside the scope of my influence. Now, so individuals can deduct qualified tips received in 2025 through 2028. The deduction is up to $25,000 per year of tips can be excluded off the tax return. So you can deduct up to $25,000 of qualified tips received. And we'll talk about what constitutes qualified tips in just a moment. Now, when you get to higher income levels, the $25,000 maximum deduction begins to phase out. It begins to reduce. So if you're a single filer and your modified adjusted gross income, we'll just say your income is $150,000 or more, you may be subject to that phase out. And for married filing joint couples, the phase out threshold is $300,000 for married filing joint couples. Now, this deduction is allowed, number one, only if the taxpayer has a valid Social Security number. And when I say a valid Social Security number, and this will apply to the other provisions I'm going to mention as well, not only must they have a valid Social Security number, it has to be one that's valid for work within the U.S. Sometimes foreign individuals who come here, it depends, on what context they're here. Sometimes it's under a treaty provision, articles. Sometimes they do receive a valid Social Security number, but it's not valid for work. And it says so right on the card itself, not valid for employment. So anyhow, you have to have a valid Social Security number. An eligible individual can claim the qualified tips deduction on their tax return, whether they itemize deductions or take the standard deduction. So it's not one or the other, it's an above the line deduction. If they are married, they can claim the deduction only if both spouses file as married filing jointly. You cannot claim this deduction if you are married filing separately. Now, reporting. This is where it gets a little bit tricky. Bear with me. The reporting, employers are going to be required to report the qualified tips on the Form W-2. Some employees report them directly to us on the IRS Form 4137. And then you have tips that are paid to individuals who are non-employees. It could be, you see this a lot in the gig economy, Uber drivers, Lyft drivers, other individuals where they're not technically an employee of that organization. So their income is reported to them on a 1099 NEC, non-employee compensation, or a 1099K. But regardless of what it is, the tips are going to be reported on the Form W-2 or the 1099 series document, whatever it is. However, for 2025 tax year, it is a transition year. So the businesses are not required to report it on there. Some will, some may not. So it's up to the individual if they're going to claim this deduction for 2025. You'll have to establish your own records, document it, keep those records, and to substantiate in case we ever question you about it, to show that deduction. But then moving forward for the 2026, 2027, and 28 tax years, it will show up on the W-2 or the 1099 document. Let's peel the onion back just a little bit further. There's quite a bit to discuss because not all tips are deductible. I mentioned the term qualified tips. there are some certain specified service trades or businesses that are not eligible to claim this deduction. It depends on the facts and circumstances of each case. And I'll just, it's basically that tips to industries and workers that commonly receive tips, commonly, are usually deductible. These specified service trades or business apply. Just for example, if you were to tip someone in the health industry, such as a doctor, a nurse, a dentist, those folks cannot deduct the tips under this provision because they're in that specified service trade or business. When we get into issues with lawyers, tips to lawyers, tips to paralegals, tips to accountants, advisors, brokers, consultants, things like that, those folks cannot deduct the tips. They are in a specified service trade or business. And that's because most of the value comes from their skill or reputation of the owner or the individual involved. And the final thing I'll just state, and this is an important one, is in order for the tip received to qualify for the deduction, the customer must give it voluntarily. It's not something where the tip amount cannot be negotiated or set by the business. So again, qualified tips must be paid voluntarily by the customer, not subject to negotiation. So for example, if in the case of a restaurant that imposes an automatic 18% service charge for large parties, and then they distribute the 18% to the waiters, the bussers, the kitchen staff, because that is an automatic in a case, and it's usually for large parties, you're all familiar with this, I assume. Individuals can deduct qualified overtime pay that is above their regular rate of pay. So, for example, it would apply to the half portion of time and a half, and that's the time and a half that's commonly required by the Fair Labor Standards Act, and that's what we go by, the Fair Labor Standards Act. So it's only the half portion that's above your regular rate of pay. So just for example, if I made $20 an hour and I worked 1 hour of overtime at time and a half, so instead of my regular base pay of $20, I get paid time and a half, so I get paid $30. Well, the $20 that represents my base pay is not deductible. It is that half pay above that $10. So the first 20 of the 30 is not deductible. It's that half pay, that portion of time and a half, the premium, that is the deductible amount. And similar to tax on tips, the deduction is limited. The maximum is $12,500 for single filers. It's $25,000 for married filing joint. Same as no tax on tips. If somebody's income, a single person, is $150,000 or more, the deduction begins to phase out. If it's $300,000 or more for a married filing joint couple, it would be subject to the phase out. And again, it's a transition year, so it may or may not show on the employee's W-2 because it is a transition year. So if you're impacted by this, you may need to do some of your own documentation if your employer doesn't show it on the W-2 for the 2025 tax year because of the transition rules. But next year for 2026, 27, and 28, it will show on the W-2. All the same items apply. It applies whether you itemize deductions or take the standard deduction. You have to have a valid Social Security number. If you're married, you can't file married filing separately. All these same things apply across the board for these provisions. And I'll just close by saying that this deduction, the no tax on overtime, is expected to impact approximately 58 million people this year, according to the Bureau of Labor Standards. Moving on to the second to the last item today is no tax on car loan interest. Same thing, 2025 tax year through 2028. Individuals can claim a deduction of up to $10,000 for interest paid or accrued on a loan taken in 2025 to buy a qualified passenger vehicle for personal use. Now, there's a lot built in there. We'll come back to some of those in just a moment. You have a phase out with this one. It's a little bit lower of a threshold. So you can claim a deduction of up to $10,000 of qualified car loan interest or vehicle interest. But if you're single and your income's 100,000 or higher, you may be subject to a phase out. Married filing joint couples, it's 200,000 or higher. And when we're talking about vehicles, we're just basically saying qualified passenger vehicle could be a new car, a minivan, an SUV, a regular van, a pickup truck, a motorcycle, etc. The key criteria is number one, it has to be new. You can't claim it for a used vehicle. Number two, here's a big one. It has to have its final assembly in the United States. How would you know where it's assembled? Well, first of all, you look at the sticker on the car or the vehicle, the MSRP sticker, the manufacturer suggested retail price. It will usually show where the vehicle is manufactured. Number two, if you go to the links that we included with the resource document and on this PowerPoint, there is a VIN locator tool, VIN, vehicle identification number locator tool. You can put in a vehicle's VIN and it will tell you where it's assembled. So that's a key item. New vehicles, final assembly in the US. It's available whether you itemize or claim the standard deduction. And this provision is expected to impact about 13 to 15 million people. And the last thing I'm going to mention is the final slide talks about the temporary enhanced senior deduction. Same thing, it's for 4 years, 2025 through 2028. A qualified individual can claim an additional $6,000 deduction on their tax return. And a qualified individual is any taxpayer who's age 65 or older by the end of the tax year. So if they were 65 by December 31st, 2025, and they meet all the other criteria, they can claim an additional $6,000 deduction. For a joint tax return, if both spouses are age 65 by the end of the year, the deduction is double. It's $12,000. Now, the phase out limitation applies here, and it's a little lower than the other provisions we previously discussed. First, if you're single, $75,000 or more, you may be subject to the phase out. Married filing joint couples, it's $150,000. Again, all the other items apply. You have to have a valid Social Security number. If you're married, you have to file married filing jointly. And this provision is expected to impact approximately 54 million people. So with that, I apologize. I went about 5 minutes long, so I apologize to the Congresswoman's staff, but I'll turn it over to Brenda and we'll see if we have any questions, field your questions, comments, concerns.
At this time, we'll begin our Q&A portion. Mr. Wozniak will be answering questions submitted through the chat. If you have any general questions, please feel free to type them in the chat box. And we do have a question. I filed a request my refund check to be mailed to me, but I have received a letter requesting that I enter my bank account information online so the payment can be sent direct deposit. Is this legitimate?
It is legitimate. We have a couple of things. So first of all, I talked about electronic filing and using direct deposit. That's the best thing you can do. The fastest way to get your money. Now, earlier this year, President Trump passed an executive order, and it is mandating, the transition to electronic payments for all federal disbursements, which includes federal tax refunds. So, with the new mandate, the new executive order we have, we're trying to avoid paper refund checks to comply with the mandate. So, if you file, whether electronically or on paper tax return, but you're asking for a check to be mailed to you, you're very likely going to receive this letter. And if you were to look in the upper right-hand side of the letter, you'll see it is a CP, as in computer paragraph, 53E, as in echo, CP53E. So that's the legitimate letter, and it asks you to go to irs.gov/accounts and enter your direct deposit information. When you do that, you are creating the online account. I had mentioned the irs.gov online account earlier, where you can see your transcripts, your W-2s, everything else. So we're just asking you to create an account and put your bank account information there, and then we'll send you the check right away. Now, if you don't respond to the letter, don't worry, you're still going to get your money, but it's going to be delayed. What will happen is the check will be mailed 6 weeks from the date in the top of the letter. So again, I strongly encourage electronic filing with direct deposit, but those are legitimate. You can go to irs.gov/accounts and check it from there.
Thank you, Brian. We do have another question. I tried to file my tax return electronically, but it was rejected because a tax return has already been filed under my Social Security number. What should I do?
Don't panic, but you may be a victim of identity theft. So, first of all, when people file electronically, there's quite a bit of personally identifiable information on the tax return that we match up. So, in order for someone to file a tax return electronically, we look at your name, we look at your SSN, we look at your date of birth, we looked at other items on the return. So, if you tried to file a tax return and no one's filed the tax return for you up till then, and somebody already has, you may be a victim of identity theft. Or sometimes we see where, especially with parents claiming children, that the parents may think they're still eligible to claim the child, so they may have claimed the child, quote unquote child, even if they're off at college or something like that. So it's possible that that's one of the scenarios. But once someone submits a tax return and they have your name, SSN, the other identifiable information, you cannot file electronically at that point. Check with your parents, or if you know somebody else who may have incorrectly or perhaps correctly claimed you as a dependent, that's a different issue. But you should file your tax return on paper and then include the identity theft affidavit. There's a separate form. It's a form 14039. Complete it, attach it with your tax return to state you tried to file electronically. It was rejected because your name and SSN had already been used on another return. And we'll investigate it and see if you should be in the identity protection program or not, and get you the IP PIN and all those other things. By the way, I should state, if you are a victim of identity theft, those cases can take an awfully long time to get resolved. We normally try to resolve them within 120 days, but they can go beyond that. It's complex because we have to go through and verify you are who you are and make sure we get it right this year so that we can prevent all identity theft crimes against you moving forward next year. And of course, by the way, if you're a victim, if you really are a victim, you'd want to go to identitytheft.gov and take other steps to protect yourself. Lock down your credit profile with the 3 credit reporting bureaus, all those different things. Get a free copy of your credit report. Make sure there's nothing else going on. Thank you, Brenda. Great question.
Thank you. We do have another question. Will the free tax center locations help business owners or property owners answer specific questions regarding different types of deductions we are eligible for that we are not aware of with the new tax law changes?
No, unfortunately not. So you're referring to the volunteer income tax assistance and the AARP sites. Now, with AARP, with seniors, they do have something called tax counseling for the elderly, where they will do a little bit more financial counseling for seniors. But as far as information on business deductions, no, none of them will do. It's possible they could do a very simplified self-employment form. You'd have to check with each location directly, but generally they do not prepare business tax returns. They don't prepare tax returns that involve rental income. For example, if somebody has a rental property, that can be very complex. You're depreciating the property, you have income, you have expenses, you have other reporting requirements. There's a lot to that. And they generally are not going to handle the more complex tax returns. There is information posted on irs.gov covering all this, different provisions of the law. You may want to seek a tax professional. We have that link on choosing a tax return professional. Most business owners, more than half, it used to be about 72 or 74%, still use a professional tax return preparer, whether it's a certified public accountant, enrolled agent, tax attorney, licensed tax consultant in the state of California. But those sites, again, are only for more simplified tax returns.
Thank you, Brian. We do have one last question. If someone finishes college before the age of 24, can a parent still claim them as a dependent? If not, what kind of proof do they ask for?
There's a lot to dissect there. And again, it all comes back to the specific facts and circumstances of each case. Now, claiming a dependency exemption, the rules on dependency exemptions and personal exemptions have changed dramatically over the last couple of years. So keep in mind that that's one item. But in this scenario, there's multiple tests we would look at to see whether someone's eligible to claim someone else. But in this case, we're going to look at the support test. How much support did the individual pay for themselves, and how much support did the parents pay for them? Who's paying for more than half of the support? And this rings home to me. I have a child in college. He's 25. He's graduating this year. But in his scenario, I'll give you two things. If he had been taking his own student loans, where he's the one legally liable to pay the loans back, and he's using those student loans to live on for his tuition, his room and board, and other expenses, those loans count as if he's paying that toward his support. On the other hand, if the parents, or me in this case, are paying all his expenses, then that counts as the parents paying his support. So I would start with the support test, and I'd recommend you take a look at IRS publication 501. It talks about the eligibility and whether you can claim yourself or whether someone else can claim you under the quote unquote dependency rules.
Thank you, Brian. Thank you, Mr. Wozniak, and thank you, Congresswoman, and thank you all for joining us today. We hope you found this tax webinar helpful and informative. If you need assistance with the IRS or any federal agency, please don't hesitate to contact our office at 818-253-3535. Our office is here to help. Thank you again for your time, and we wish you a successful tax season. Thank you.